Hello, welcome. This is SeeWing Yee from the Yee Real Estate Network. I am today going to talk about the housing status for August 2022 in San Jose, California. Now, so welcome, and just so you know, I personally live in the Bay Area for the past 33 years. So I'm very much aware of what's going on. All right, so here it is. This is the data from Redfin. It's a weekly real-time data that I'm going to provide for you, and not only in San Jose, but in many other markets every week. So I'm going to cover many cities. So this is very exciting. So we're going to challenge all the noise out there, who's right, who's wrong, who's accurate, who's not accurate, what have you. But all I can do is share with you the real data, and the data does not lie. Anyway, so again, the days of multiple offers are pretty much over, not only in Bay Area, but in San Jose, but all over the country as well. I remember early this year and last year during the pandemic, on a weekly basis, I hear that some house or sold $1 million above asking. That's right, and I'm sure you guys heard about that too as well. And they're typically up until a few months ago when the interest rate were around 3.5%. We in many of the good areas in San Jose and in Bay Area for that matter, people were getting like 20 to 30 offers per house, over asking, 20, 30, 40% over asking. So it's a mind-boggling, right? But now we're getting like maybe one or two offer per house. And I'll share with you the data. So again, if a seller lists their house in a good condition and they price their house fairly, it'll sell at the list price. If a house is not in good condition and the seller thinking this is continue to be a housing boom, and they list their price way over than what the market demand based on the interest rate rise from 3 to 6% in a mere 4 or 5 months this year. They are in for a rude awakening. So this chart, this is mind-boggling. San Jose is really one of a kind market compared to the rest of the country. So yeah, according to this graph, a person need to make $330,000 to afford a 1.87 price home in San Jose. This is mind-boggling, which is a higher salary required. Plus, in addition, you need at least 10 to 20% down payment and very good credit in order to compete in this marketplace. So all I can say is it's a very interesting market. I wouldn't say it's going to be a crash or drastic reduction of prices, but I will share you the data. So as you know, the other hot markets, high price market in San Francisco, San Diego, LA, similar, right? You need at least 150K or higher in salary just to qualify for the median price of homes at those locations. So this is mind-boggling. So I'm going to share with you now the graph that we're going to talk about. So let's go over the Redfin's weekly housing market data. And so what I'm going to do is I'm going to start out by sharing with you the median sale price in San Jose year over year ending August 7th, 2022. And as you can see, the median sale price is 1.4 million. Now, San Jose is a very huge market. We have at least 1 million people living in the San Jose, Santa Clara County area. So it covers a wide spectrum. There's a lot of smaller cities next to San Jose, like Sunnyvale, Campbell, Santa Clara, and Los Altos, and many other smaller submarket within the San Jose proper. So There's a, every neighborhood, every mile is very, very different from one neighborhood to the other, right? There's a vast price differences. So when I say what I cover, San Jose is a very, very huge market. So, but as you can see, the median sales price has decreased from April, the start date of this year, which is at 1.62 million, down to 1.4. My takeaway from on this graph is that because of the lower affordability, because of the interest rate has risen from 3 to 6% earlier this year, it's harder to qualify to buy a home. So the people that do qualify lately, they have to buy a lower price home. It does not mean that the price has decreased, okay, from 1.62 few months ago to 1.41, right? So this, by the way, this graph, this data is a short-term trend. It's not you cannot draw any conclusion in any way, shape, or form about, trajectory of what's going on. We need a more longer data. But all right, does it make sense, everyone? All right, so now let's go over the past 3 years, what has transpired during the pandemic. So the medium list price in August of 2019 is a little bit over 1 million, right? Then a year later, when the pandemic started, August 2020, it has increased by year over year by 8% appreciation. Then from 2021 to 2020 to 2021, a whopping 16% appreciation, right? As you can see the gap. And then from 2021 to 2022, year over year, is around 3%. But at the same time, you have to look at this data here, right? From April 2021 to April 2022, we still saw a 19% appreciation. So this is the data you should look at, right? This is the benchmark to judge the appreciation between between May in 2022 to May of 2021. So we see a 20% appreciation increase. But over here, the sales price is lower, as I said earlier, because of the people can only afford to buy a median price of 1.4 million in August because of the it's harder to qualify, and the mortgage payment is a lot higher now than a few months ago when interest rate were a lot lower, right? So this is the benchmark to be used. So when all said and done, 1.62 median sales price a few months ago versus 2019 before the pandemic, 1.1. So you can make the argument that the housing appreciation in the past 3 years is really mind-boggling, right? So that's one metric I'm sharing with you. Now, the second metric I want to share with you is the active listing, the home that are put on the market. Okay, and let's go over that. Active listing. So right now, August 2022, the active listing is 2,469. So in terms of house being put in the market right now, there's a little bit over 10% increase in listings from last year, from 2021. So a little bit increase, nothing drastic. So every year is pretty. Then 2019, there were 3,100 listing, 32% year over year over 2018. Then 2020, during the pandemic, 2,500 listings occurred that month, which is the inventory has lowered by 20%. Then last year, 2,200 listing year over year in August, right? And now from 2,200 to 2,400, just a couple hundred homes higher this year in listings, all right? So it's quite low. Now, what would be the next scenario? The next scenario is look at the pending sale, right? From those listings, the pending sale is a mere 250, which is way down 37% from year over year from 2021. All right, so pending sales has been lower, therefore, so not many people are buying this year from last year, right? And then you look over the medium sales price, right? Because medium listing price is a price that was listed, okay, currently, which is 1.3, right? Okay, the medium listing price has been lower, as I said earlier, because of home affordability. All right, so 1.3, which is 7% higher than year over year than 2021. Now, then new listing medium price, then medium sales price is 1.4. So the sales price is a little bit higher than the list price. So that tells me the market in San Jose is still fairly competitive. We have not seen, that much of a reduction. Now, let's look at the so-called price drops. So I want you to be careful. Don't freak out with this sort of a vertical increase line. Now you have to understand the underlying data behind this, graph, which is the percent of active listings with price drops, which is 9%. That tells you that the seller, when they put the house for sale a couple of months ago, this data is really a few months behind, right? They were in denial. They think the market continue to go up. They failed to realize that demand has decreased based on the interest rate increase from 3 to 5% or 6%, right? Almost 100% interest rate increase. So we have to watch this trend. So I suspect. Oh, one more thing, right? This kind of a transaction occurred a few months ago during the height of the summer, during the beginning of summer, where people is a seasonality situation, meaning that at the beginning of summer, people are not focused on home buying. They are going on vacation, because the pandemic is pretty much subsided drastically, or people really want to focus their attention on vacations and traveling. So it's typical pretty early summer each year that the home sales are low until perhaps as we move into the October, November, when the seasonality situation pick up and more people start or potentially buying homes. So this trend, I would not, I would not be concerned about it that much. But having said that, of course, just like other part of the country, many sellers are dropping the list price, right? They're dropping the list price to coincide with the real market demand, which has subsided pretty drastically for the reasons that we mentioned. All right, so some sellers have one price drop. How much we don't know, 2 or 3%, depending on what neighborhood. Then if there are no offers for a particular house, some seller will drop their list price for the second time. All right, so again, that's what's happening. Now, let me share with you days to close. Days to close is 23 days, around 3 weeks. So that's pretty normal in a normal market. I mean, like before this year, I mean, as soon as someone put a house on the market, they were receiving 10, 15, 20 offers within 24 to 48 hours and what have you. But now it has decreased, as you can see, by 4% from year over year, from this year, from last year. So it's pretty normal. The prices, depending on neighborhood in San Jose, is still pretty competitive. And medium days on the market, once again, like I said, a mere 3 weeks to someone put their house in the market that are in good condition, that are priced correctly, it gets sold within 3 weeks, which is pretty nice. But it has been increasing, right? Before the interest rate rise, the medium days on the market is barely over 1 week. So we still have a lot of multiple offer situations earlier, the beginning of the year. Now is taking longer for the house to sit on the market. That allows the seller, force the seller to reduce the list price to meet the market demand. All right. Let me see what else I need to go over. Oh, month of supply. That's very, very critical, right? Before I click this link, to have a balanced market where supply equals demand, you need about 4 to 6 months of supply of inventory. So let's see what are the months of supply of inventory in the San Jose market. Wow, this is interesting. 10.4 weeks of supply. So you divide by 4 weeks per month. So 4 divided into 10.4, we barely have 2 months supply of inventory. So 2 months supply of inventory in August 2022 is very, very low supply. Okay, so that's a concern, right? Very, very low inventory supply, and demand is moderate at this time. So this is a concern. But if you compare to 2021, the weeks of supply is 5.2. A year ago, August 2021, the supply of inventory is barely over 1 month. This is a historical low last year. That's why the house price increased so much in the Bay Area. So barely over a month, which is extremely low, historical low last year. And now is even at a little bit over 2 months of very still historical lows. That tells everyone that based on the mid-year trend, the price is not, to me, the price cannot go down because supply is so low of inventory and the demand is pretty moderate. Imagine if the interest rate stay at 5.5% for later this year or even slightly lower, we could see more demand, people coming into the market. So we can see some uptick of activities later this year. All right. So anything else I need to cover? Okay, average sale to list ratio. That means, okay, this is a good metric. Average sales to list ratio, that means based on the actual sales price, based on the list price, the actual sales price is of people buying at the list price before they get under contract or whatever. So, and the answer is, as of August this year, it is based on the list price, they're selling right at the list price. So that's a good, kind of a good situation. But before this month, August 2022, we talk in March, right before the interest rate increase, the average sale to list price is 1.14. That means people way overbidding based on list price at the beginning of this year. So, right? So how things have changed. So in a way, it's good, right? We can sort of a little bit of a buyer's market, at least temporarily. So there are more houses available out there. The buyer have a little bit more negotiation power, at least temporarily, right? If the interest rate stays at 5.5%, then we can see a moderation. We can see some sort of a balance, and there are more opportunity for buyers, including first-time home buyers. There's a small window of opportunity for first-time home buyers, people with VA loans, 0% down VA loans, and FHA 3.5%, or conventional loan first-time buyers that have the ability to put 10 to 20%. You're not going to be outbid, so you can have an opportunity to get to buy one of these homes during this reset environment situation. Does it make sense? All right, let me see what else. I think that's pretty much I have to say. At the end of the day, for primary home buyers is a good window to bid on a house with that are fairly priced. You're not going to overpay, and you don't have to you can still do an appraisal, you can still do an inspection report. So you're not going to buy a house that are not in good condition. So it's a good situation. Things could change later this year. So take advantage. Again, primary home buyers. If you want to, this is not a short-term kind of things. If you really want to, if you can afford it based on the interest rate, but based on the mortgage payment relative to your income, you feel good about job security. If you have some cash reserve to hold you over in case of any kind of downturn, emergency money, funds. If you're gonna, if we buy a primary home, not only is I would say anywhere in the country, you need to have a long-term horizon, 5 to 10 years or more, because you cannot time the market. So that's how it is. In terms of so my takeaway is, I do not see a crash bubble or a correction in the San Jose Bay Area, because it's still a very desirable place to live, right? And we have a lot of high income people still want to live here, Silicon Valley, right? That's the epicenter of the high tech revolution. So you still have a lot of high income people that want to live here in the Bay Area, and and of course, stock options are limited, so people not overbidding anymore. You're not going to see many cash offers. But still, I do not see any kind of maybe a slight price drop, maybe at the upper end, like a $2 million range or higher. You may see a 5% or 10% drop. But on a well-priced home within 1 million to 1.5 million in a good area, entry-level homes, if you will, in the Bay Area, you may, in a good location, good district, you can see some very competitive bidding. So, so it's not doom and gloom. It's not crashing scenario. Contrary to what you've been hearing out there with the mass media and the YouTube videos. All right, so that's all we have. Thank you so much, and thanks for listening. This is SeeWing Yee from the Year Network. Have a nice day. Bye-bye.